Yeah, hello guys. In this video, I will show you something that will actually helps you to to be able to execute your trade properly, and probably will guide you, take away some fears from your execution, and then you will know exactly where you have to take the trade from. So let's go into it. Look at this like this. Once you understand what we call trading range, then you will actually know how to take your trade irrespective of your method. But if you don't understand the trading range, then there will be problem. Look at it. When we started trading, they tell us this is how the markets move: higher high, higher lows, higher high, higher lows. This is what they told us. But in the recent, they don't tell us what make these higher highs valid, what make these higher highs the true higher highs. Sure, you understand? So if you now want to go into SMCs and understand that, okay, this is where I want to trade, because that time they tell us that once market break this high, it means that for the trend to continue, this low must be protected. Then it means that even if the market come a little bit below, as long as this level is being protected, we are still in uptrend. But nobody actually told us what makes these higher highs and higher lows valid. So that's what I will explain here. See, look at this. For this to be valid, SMC is just an advanced market structure. Sorry, price action. So SMC will tell you why this is valid, why it's not valid, where is your trading range. Sure, you understand? So that's what SMC will show you. And if you're able to understand the market structure in SMC, then your problem will be solved at least 70%, because you will know where to trade from, where not to trade from. Then the other percentage can now be from some other things. Sure, you understand? But knowing the trading range is going to change your trading. Believe me. So look at it. This is how it is in SMC. In SMC, we have a movement like this. Whenever you are seeing markets doing this, don't think it's the same thing with this. No, it's not. It's not the same thing with this, because in SMC, for this to be valid, there must be reason for it. There must be liquidity. So for this now to be a structure, this can be a structure according to the way we were taught. But for this to now be confirmed, for us to know difference between this, and to know when this one is valid, the same way this one is valid, then that's when the SMC comes in. So in this case, this is what SMC structure look like. You wait for market to take out this previous low, then allow the market to push up. So this is exactly when we can now say we have a break of structure. So in this case, if I'm to draw it, all this just look like one leg, then pull back and continuation in this place. But explaining it, this is how it actually looks on the real chart. So for you now to know, now we have a scenario like this. Where is our trading range? It means that this low has been confirmed. Then for the high to now be confirmed, market must take out the last pullback. Let's say this is the last pullback. This last pullback will serve as an inducement for us to trade with. So in those situations, we must wait for market to come back. But let's say market do not and create another pullback. Don't be deceived. This is not a break of structure. Because of what? It doesn't have liquidity. It doesn't take out any liquidity. No inducement is involved. So you will now see that market will do something like this and now use this low as a liquidity. So if you understand the trading range and the market structure according to SMC, you will know that this is a trap. You are not supposed. This is not going to be protected, because it's going to be used as what? As a liquidity that will push the market up. So now for you to now enter this trade, or for you to know where your trading range is, you need to, because we've identified the low, then you need to wait until market take out this. So once market take out this, then this is high. So it means that you are trading between here. You have the opportunity to buy when the market come a little bit deeper as you want, or depending on your trading strategy, your entry model. But you know that market must not take out this low, and for this trend to keep continuing, then market must do whatever I want to do in between, then break up. So that's when you can now say you have a break of structure. So in this case, once you identify trading range, let me tell you something. You can even have a simple entry model like using Fibonacci like this. Look at this Fibonacci. This is your low, then this is your high. Then you take it like this. You can take entry at 75% pullback. This can be your strategy that once I identify my trading range, once market pull back to 75% 75% Fibonacci, I'm taking my trade. And you what? You target 1 to 3. Very simple. Minus 0.2 Fibonacci extension. That's all. So you don't need to complicate this. Understand the trading range alone, according to SMC, can save you a lot of stress in this market. You can decide that you want to take trade based on 65% pullback. If that's okay by you and you take your 1 to 2 or 1 to 3, you are fine. All you need to do is to just be consistent with this approach. Knowing the trading rate, and I have to tell you guys, there is no strategy that is special in this market. Nobody gets to understand this thing all. What makes someone to be profitable is your ability to do the same thing repeated over and over. So in this scenario now, once you come to the chart, identify your trading range, identify your structure range, that's all. Then you know all you need to do, instead of looking for POIs, instead of looking for whatever things, all you need to do is to just do what? Identify your inducement. Inducement is like a trap. Then once you figure out the inducement out, put your Fibonacci. I'm just using this as an example. If you don't want to stress yourself on the exact point to pick the trade, then use your Fibonacci minus 70 or minus 60% pullback or 75% pullback or 70% pullback. It's fine as long as the risk to reward will give you more than 1 to 2. That's all you need in this market. You don't need to be thinking there's one almighty formula that will help you. Nothing. There's no almighty formula in this stage. So the why a lot of people are using Fibonacci wrongly is because they don't understand the trading range, the structure range, where the high of the structure is that is valid and where the low is. So that's why a lot of people don't really understand that. So if they are using Fibonacci, they use it wrongly. If they are trying to pick entry, you can get everything right, but you're getting your entry can also be an issue. So that's why I suggest you use Fibonacci to just save yourself a lot of stress. And once you have that system in place, identify your structure range, put Fibonacci, come back to maybe 60 or 70, anyone you choose, then stick to it. Just stay to that principle. It doesn't mean that next time if you, let's say this is a win trade for you and market creates something like this, it doesn't mean that all the time that market will definitely keep coming to 75 for this thing. See, all strategy, you have to understand that you will miss trade. If you are any strategy you are using that you are not missing trade, some of the trade are not invalid, then that's not a strategy. Believe me. So you just have to understand that. So don't be worried about whether my strategy I will make money. No, just focus on being consistent with that strategy. Focus on using that strategy repeatedly. The market will reward you. So look at this now. This is our high because this level serve as a liquidity like this. And we are to do what? We are to come wait for 75% pullback using Fibonacci, then target maybe 1 to 3. Sure, you understand? But in this case now, this is a structure, but it does not align, it does not come to where we want to buy. So you leave it like this and you follow through. Okay, this is a missed trade, nice one. And you do what? You readjust yourself, you reposition. Where is our trading range? Then this is our low. Then this is the new break of structure that the market just created. This level break of structure. Why? Because it take out inducement. So this is the new break of structure, which is valid. So all you need to do in this situation is chill and wait for market to create another pullback that will rest as your inducement. Then if market refuse to come back, create another pullback, no panic. All you need to do is to keep adjusting it and understand that, okay, this is your range in the market. So immediately you observe that market do this alone, take out this low either by wick or by sweep or by anything. No panic, just come to your Fibonacci and draw it like this. Wait for here. Let the market do its things. You can miss trade 2-3 times, but your ability to stick to your rules is what will make you profitable. And understanding the trading range will also do something for you. It will enable you to filter out the noise in the market. Because look at this. You can't tell the market how it's going to play out in the market. Whether it will range, whether it will come very fast, whether it will come slow, you can't dictate that to the market. So look at this. Market can decide to do this, do this, do this, and come down finally and do what? Break up. So at the end of the day, market still come to you. So you don't need to stress yourself. Once you understand this, your biggest one of the biggest work you have in the market is to stick to your strategy. Every other thing is just a distraction or a minor. Once you have the ability to stick to your strategy, trust me, everything will start align with what you want. The payment, your PR, profit and loss, everything will start balancing. And this is what they mean by follow the process. When they say follow the process, it means the plan that you have, the strategy that you are using, the rules that you set for yourself, you follow through. You do that according, you enter trade according to what your plan asks you to do. So if you're still trading, you don't have a trading plan, you don't have you have the strategy, but you don't have the trading plan. You are just starting. You never started anything, because your trading plan will contain your strategy, is going to contain where you will enter the trade, where you will leave the trade. It's going to contain how much are you risking. And one good thing is you have to have one fixed percentage. If you're risking 0.5, fine. Or throughout the trade, throughout the execution process, throughout hundreds of trade or 20, 30 trade, stick to 0.5. That's what will protect your capital. If you are using 1%, stick to that 1%. That's how you will be able to figure out how your trading plan is working. And most importantly, when you set a trade like this, before the market gets there, or when the market trigger your entry, screenshot it, document it. That's why they are talking about journaling. You have to journal. You have to take the trade documented, then make sure that all the plan, maybe, okay, for example, now you need to come to the chart, and first thing you need to see, you have to see that, okay, market create a structure, break of structure. It means that maybe it has already broken that structure, you can't take that trade again, then you wait for another one. So now one of your rules in the game will be inducement must be taken out. Now you know that you will have to identify your inducement. Once you identify your inducement, then you mark it on your trading plan that, okay, inducement has been taken out. Then market must come to 70% Fibonacci. Then you mark it as market come to 70% of Fibonacci. You said yes. Then you execute. But if market do not take out inducement and it do not come down to 70% Fibonacci and no break of structure, prior break of structure before that time, then you will know that you are going off your track. So I don't want this video to be too long, but the secret to this game is the consistency in your approach. If your approach is consistent, then that's when you can now be seen consistent in your entry. For example, in your profits. So look at this. This is what I noticed when this market got to this level. I discovered that, okay, market has already broken this level. Where is my trading range? This is my trading range. This is my low. Then when market broke this level, I know that we had probably inducement here. We had an inducement here because this is a small pullback. And market do what? Market take out that inducement. and do what? And push. Because I understand that this is not an inducement. This is just a pullback. So after market take out this level, then look at this. We had movement like this, movement like this, movement like this. So this is our inducement. So it means that immediately market take out this level, I mark this level as my trade structure range. So, and I know that market will come. For example, now me, I use other block to enter my trade because at least I understand how other blocks work, what make other blocks valid and so on. But based on what I explained now, look at this. Use 75% Fibonacci straight. Market eat your TP. But what you don't notice is market make noise in between before you get to your TP. So this range is where most people lose their money. This range, because they will be like market supposed to go to their TP directly. No, that's not the case. Once you execute your trade, just leave the rest. Let the market do its thing. TP or SL, and probably maybe you have a way of managing your trade. Fine, it's good. So if you look at this again, after we broke this high, then this level remain as our what? Trading range. So according to what I explained to you, this is our inducement. So me not using this other block, but let me use the Fibonacci as I explained to you. Look at 75% Fibonacci. So it means that you will be waiting here for the market to get to this level. Then you target extension. 1 to 3. That's all. You don't need more than this. If you stick to this alone, trust me, you will be profitable. But what will enable you to understand it is when you understand the structure range. Once you understand the structure range, that's when you can use the Fibonacci effectively. So whatever market is doing here, it should not be your problem. Look at this. Market can do this, then push up. And if market hit your SL, then you reposition. You know that we have change of character. Then you repeat the same thing, because if we have change of character here, it means that we have to identify our inducement here. So if market come back there, then it means that this is our trading low and this is our trading and structure range, then this. So it means that market is not supposed to violate this level. Then what are we going to do? All we need to do is to put our Fibonacci here, then look for sell from 75%. That's all. Target 1 to 3. So this is all you need to do, and every other thing will now be for you to be consistent with this, for you to be able to use this. You can try this out, back test it, and let me see, and you will see that your win rate will actually improve. Then your consistency too will actually improve. Your execution, you have nothing to worry about, fear and so on, because you actually understand the trading and the structure range. So once you understand that, every other thing will become a bit more easier for you. So that's it for this video. It's almost 20 minutes already. So bye for now, guys.